And we are live.
Hey,
Hey, welcome everyone.
well, we hope you all had an interesting and a very good day today. We were just
Yes.
talking about hours, but it's 6 o'clock, and we like to start on time. And
Mhm.
because this is a 30-minute program, we want to end on time. So I am going to jump right on in.
Awesome.
I'm going to put my
Awesome.
timer on
So we can stay on
so we
task.
can stay on task. That's right.
Yes. And if you all have questions, please go ahead and type them. We'll get them towards the end so that we can catch them. So, hi to everyone. It's okay to say hi. Hi, Nancy.
Hello,
Hi.
Nancy. All right, well, let's get started.
Mhm.
So today, if you received the email, we're going to be talking about uh, dividend growth companies,
Mhm.
as well as Nakia is going to be talking about ways to build wealth also.
Mhm.
And so I'm going to start off.
Mhm.
The last time we talked, someone asked me about what is a dividend growth company. She put it in the um, hello, ladies.
Hey,
You put it
Regina.
into the comment section. So I thought that I would start from basics. What
Mhm.
is a dividend? Okay, a dividend is a payment. It's a payment from a company to the shareholder. So if you own a share, a half a share, a quarter of a share of a company, you are a shareholder. And so, what a dividend is a payment to you, the shareholder, from the company. Now, that payment can be in the form of cash, which we
Mhm.
like, or, and most companies will, their dividends are in cash, or they can actually be in stock. So either way, that's what a dividend is, and it's given quarterly. And so many companies, the majority of companies, when they pay you a dividend, it's usually paid quarterly. So
Mhm.
4 times a year. Take for instance Microsoft. Oh wait, disclaimer. Disclaimer. Thank you. So first off, we are not financial advisors.
Right.
And so, anytime we discuss a stock in particular, it is not a recommendation for you to go out and buy it, or if you have it in your portfolio, to sell it. The information that we give you is for educational and informational purposes only. Okay,
Yes.
back to dividend.
Understands.
I was saying that dividends are given out, and most companies will give them out quarterly. Some companies give you dividends monthly. There are some companies like Disney
Mhm.
who would give you a dividend once a year. And so it depends on what the company is, but the majority of them are going to give you dividends quarterly. For instance, Microsoft. Microsoft gives their dividends in March. And if you're a shareholder, so you will get the dividend in March. You will get a dividend payment in June and in September and in December. And so that is how they distribute their dividends. Um, One of the other questions someone
Mhm.
asked was, was how much will I get? She was so excited that
Yeah.
she actually emailed me and said, if I start investing in dividend companies, how much am I going to get? I said, okay, hold on. That's going to depend on two things. It's going
Mhm.
to depend on the number of shares that you have, and it's also going to depend on what the management decides what the dividend is going to be. So let's go back to Microsoft. Um, just recently, the management decided to increase the amount dividends that they're going to be giving. And so starting in December, if you are a shareholder in Microsoft, you're going to be getting, I think, 62 cents for every share that you have. So if you had 100 shares of Microsoft, multiply that by 100 shares times 62 cents, you will be getting $62 in December from Microsoft. So that's how you figure out how much you're going to be getting. Okay, really simple. Even though you see all these companies, the S&P 500 or the Dow 30, not all companies are dividend companies. Not all companies will give you dividends. So if you want to know, okay, so how can I tell if this company that I'm interested in gives dividends? And we're going to show you how to determine that. We have a graphic. And everybody has Yahoo Finance, right? On the computer. It's a nice resource. If you want to find out if your company gives dividend, just go to Yahoo Finance. And this is Clorox. And so if you look down in this area right here, it says forward dividend. That's how you can tell it is a dividend company. Okay. And not only that, they will show you, or they will tell you how much of a dividend you will get in a year. So totally you would get $4.64 per share for the whole entire year. So that's one way you can tell if a company that you are interested in is a dividend company. But a little bit more information. Dividend companies is what we like, but we really want to focus in on dividend growth companies. And there's a reason behind that. When you decide to invest in a company and it's a dividend growth company, this is a company that has a history of increasing their dividends every single year. Sometimes more than once a year. And so it's just like when you have a job and you expect to get a raise every year. These dividend growth companies will give you a raise every year. So this is particularly what we want to be dealing with, is dividend growth companies. You've got companies out there that have increased their dividends every year for over 50 years. So that means every year they've been increasing dividends. Some companies have been increasing dividends from 25 to 49 years. And these companies have a specific name. And I'm going to share some of the names with you. So if you hear something like a dividend king, or a dividend aristocrat, or dividend champion, dividend contender. Yes. These are specific dividend growth companies that have increased their dividends every year. It's just the time frame is different. So that's my little spiel. Good, I'm on time. We said we were only going to do this for, just give you little tips, little bite-sized pieces. We don't want to overwhelm you too much when it comes to learning to invest and learning about dividend growth companies. And so 30 minutes is all we're doing. And so that's all I have for right now. Grace said she has a DRIP program. That's an excellent way to buy stocks with the DRIP program. Yes. Awesome. And is it a penalty for buying stock close to when they pay out their dividends? Okay, Nancy, that's an excellent question. And this has to do with there is not a penalty, but there is a date, and that date is called the ex-dividend date. You have to be a shareholder on their books before that ex-dividend date. And it's usually, sometimes it's a couple of weeks before they actually pay it out. And so it's a process that you have to go through. So there is no penalty, but you just have to be a shareholder on their books if you're going to get the dividend. Hope that answers your question.
Yeah, I'm glad you answered that before I got started because that would have been a trying to get back to that question, get refocused on answering that one. It would have been interesting.
So that's my little 10-minute spiel on dividend growth companies. And now I'm going to shift it over to you, Nekia.
So for those of you who don't know me, my name is Nekia. Me and Marcia are partnered up together to help you guys financially and just learn how, from our own personal experiences, of how to invest and really just grow wealthy. Your wealth health is what we are concerned with, and we want to help by sharing you what we have learned and how we have actually succeeded in this as well. So I wanted to talk about how you can actually start to budget for something like this, because I know that's a lot of people's question, is how much is enough or okay to invest in. And we've said this time and time again,
Always a
it's
question.
really it's that it's always up to you. Only you will know what's best. But that is a question that can actually be answered by doing something. So we wanted to share that with you by sharing two apps that I think would be great for you guys to learn to track where your money is going and how it's coming in. We've mentioned before about budgeting and why it's good for you to know your net worth, your liabilities and assets. You need to know where you're starting from before you even get started. So where are you financially? And TrueBill and Mint are two really good, and I just learned about Mint from Dr. Marcia. I didn't even know about it, but I was using TrueBill for a good while, and I'll show you guys kind of like my screen so you can see. Hopefully you can see it, but it's circled in red, and I use TrueBill as of now, and Mint is something I'm going to be using as well, just to see how the platforms work. But I really like the way TrueBill works. It tracks everything. So really quickly, all it does is it tracks from your bank accounts. So even if it's a business account that you have, even your personal accounts, it tracks all of that, and it categorizes your spending so you can know exactly what you're spending, how much you're putting into it, and if you want to, pull back from some things so you can adjust to enjoy other things in life with your money the way that you want to. So I would suggest that you guys try and download those apps and actually go through it and start to, find out what's going on. That'll help you with your budget. And once you know what that number is, use the, what is it, the 50-30-20 rule. And we'll be sharing this in our book club community. That will be in there. But the 50-30-20 rule is 50% of your needs, you have 30% of your wants, and then you have 20% that you should be using to invest. And we're showing you guys how to look into a particular form of stock, which is dividend growth stocks. So you're going to be learning how to invest through Dr. Marcia and myself, because I'm still learning as well. So I hope that one is very helpful for you all, is to use this so you can track and see, what's going on with, your finances, and then use that 50-30-20 rule to decide what you want to budget into. If you're not sure, I know some people ask, I know I did this. This is what we were just talking about, was how do you start a budget? Now, how do you get the money to start investing? Because sometimes people think they don't have the money. The truth is, you have to think this way. You already do. You have the
You have
money
the
to
money.
invest. You do. It's just you need to know where you're starting from so you can know if you need to make any adjustments so you can take what's extra and actually put it into an investment account. So,
Mhm.
first things first, don't think you don't have the money. You do. Just use those apps to do that. And in the community, in the book club, which is this is what we're going to be talking about on the 17th, is this book here. Um, Money Master the Game, 7 Simple Steps to Financial Freedom, starting on the 17th at 6 p.m. Central, 7 p.m. Eastern. We're going to go over the first chapters, like a
Chapter.
few sections. We'll share within that community what we'll be talking about. But making sure you can start investing if you're not sure how you can get more money to invest. This is something you're interested in. We're posting in that community some income, uh, 7 streams of income.
Mhm.
Sometimes you guys don't know that you're actually doing something within one of those 7 streams that can help you to invest. So, and investing is a part of one of those 7 streams of income. So,
Yes.
yeah, we
Mhm.
if you come and join that community, that book club will be together live on there. You come there, you'll get more of the other incomes, streams of income that you can engage in if you're not engaged in them or don't even know that you are able to do those things. So
Mhm.
yeah, that's really what I wanted to share was tracking. You need to know where your money is going. You have to start taking control of it by actually looking at it, stop being afraid of it, and see where things are going so you can start to increase your wealth through investing. And
Yes.
what Dr. Marcia is teaching with dividend growth stocks is like a game changer.
And that's actually one of the 7 streams of income.
Mhm.
Dividend, getting dividends from stocks.
Mhm.
I think that's number 7.
7. Yeah, that was
Mhm.
never say we were talking about that one. Yeah, so
And as Nekia said, once you become a part of our community, we will be posting content in the Band app. That's the app that we're going to be using to give out information once you become a part of the community.
yes,
So,
yes, yes, yes.
mhm.
Awesome. I wanted to send a shout out to a specific person. Hi, Robin. The answer to your question is yes. This is where I'm at. I'm online helping others. So, if you're wondering, but I just wanted to say hi to you and miss you as well. I hope you're doing awesome.
Okay.
And I think Melanie has an amazing question. Hi, Melanie.
Yeah. Let's see. What if you have money on hand to get started? Should you choose several companies with small amounts or one more popular company?
Oh, ooh.
Okay, so that's a question about, we talk about diversification. And so, what you'd like to do is you'd like to have um, companies, you want to mix and match companies based on different sectors, companies that are different sizes. So you just don't want to just say, I want to put all my money in one company. What if that company goes under
Mhm.
or something happens and the price of the company drops? Well, you're taking a risk. And what we want to do when we are investing is we want to minimize risk and minimize losing money. So just taking a lot of money and putting it in one company is not really a good idea. We want to diversify our
Right.
portfolio as we build it.
Mhm. Mhm.
So
So
I hope
cool.
that answers your question, Melody. And that's a
Mhm.
process. Building a portfolio is a process. And we
Mhm.
will talk about how to do that also on in these investor chats and also more intensely in our book club.
Book club, yes, very intensely. We're working on it as a way of coaching and guiding you guys, even as we are learning the process. Even though we're steps ahead, we're
Mm-hmm.
we're we're going through this as a journey, and this should benefit everyone, including ourselves.
Yes, because even though we are teachers, we're still also students.
Hmm.
You know, we continue to learn too. And I think Melanie asked a question about what is a DRIP program. A DRIP
Yeah,
program
she
is a
did.
dividend reinvestment program. And that's where and some companies have DRIP programs that when they do give out their dividends, the dividends are automatically
And
reinvested
she
back
did.
into the company so that you end up buying, instead of you getting a check,
Hmm.
that money is reinvested back into that particular stock to buy more shares or fractional shares or small bits more of the company. So that is what a drip program is. Excellent way to get started too. Is to and you can see if the company that you invest in has a drip program.
Yeah.
Good question. Hmm.
Melody's question, would you say, is a good introductory amount? I know from the previous question she asked about the money on hand, if you have it on hand.
Hmm. And
Oh,
certainly, once again, Melody, we want to tell you that that depends on what you can afford. So just like Nakia was saying, we want you to get started with having a budget,
hmm.
knowing what your expenses are. Once you've paid all of your expenses, your monthly expenses, your bills, what is it that you have left over that you can actually decide, start to invest with? What amount do you have left over? And it is a myth that you have to have a lot of money to invest, because you don't. You do not have to have a lot of money. It's been made easier to invest, because you don't have to buy in one whole share of a company anymore.
Hmm.
If you decide, okay, I've got $50 left over, you can invest that $50 in a company with some brokerage accounts. They allow you to buy partial shares. So if you wanted to invest in a company that had the one share was $300, you don't have to come up with that $300. You can take that $50 and buy a piece of that, a share. And so it's because it's been made that much easier. The that whole concept about how much money do I need? Do I need a lot of money? It's gone out the window.
Because you can
Yeah.
do it, and you're building. That's what you're
Mhm.
doing. You're building. So don't think you have to have it all at once. You build and you stay consistent with it. It does
Mhm.
help when you have a budget. You got to know what you have left over and if you need to make adjustments. This is a good question, Ramona's question.
I started an E-Trade account. Can you suggest platforms for investing?
Hmm.
Um, E-Trade is a brokerage account.
Hmm.
So E-Trade, there's TD Ameritrade, there's Fidelity, Vanguard, there's Ally. There are a number of brokerage houses out there. Charles Schwab,
Hmm.
um, can also be used for investing. Yeah. So it's just a matter of choosing what brokerage account uh, you want to use. That's it. They all pretty much offer the same thing. Not all. Hold on. Let me back up. But not all of them will allow you to do fractional shares or partial shares. So that's what you have to find out. If you decided
Hmm.
that it is
Find out.
you want to be able to buy partial shares, there are only certain brokerage accounts that allow you to do that. I know Fidelity and Charles Schwab are two. Okay. Nancy asked a
Mhm.
question:
This
is
this is a good one.
there international companies
The-
that pay dividends, and are there any good ones? Oh, I'm sure there are international companies. And it's just a matter of finding out what the company is. Um, And as I stated before, once you've got a company and you want to know, do they pay dividends? Look them up. And Yahoo Finance is a free way to do that. How do you decide which sectors or industries to start with? Should you look at trends? Okay, so Michelle, when you are deciding what companies to invest in, I always tell people, start with what you do, start with what you know. Look at the products and the services that you use at home, at work, your hobbies. And so once you start choosing those companies, you'll be able to see what sectors they fit into. Yeah. And there, as far as sectors are concerned, sectors are, we have 12 different sectors that all companies can fit into. You've got your technology sector, your healthcare sector. What else?
REITs.
Yep, real estate investment trust. Yeah, there are about 11 different sectors out there that all companies fall into. But decide first, when you want to decide first, start looking at what you're familiar with.
This is a really good question.
Okay.
Because you have experience.
This is an excellent way to start investing.
Interesting.
In fact,
got time.
This is how I first started investing, through an investment club. And it was so helpful that once you learn how to invest in an investment club, then you can branch off and start your own portfolio. In fact, it's been 5 years now. We have a family investment club. And one of the ways you can start off is to contact the Better Investing. They used to be known as the National Association of Investment Clubs, NAIC, but now they are known as Better Investing. And they have an entire program that will walk you through how to start an investment club, whether it's with friends or family, but it is an excellent way to start to learn how to invest. Yes. Thank you, Robin. Yes.
Really good
question. And they show you how to do the research when it comes to analyzing stocks. They have an entire program, and it's very inexpensive. It really is. So I would suggest that you contact Better Investing. They are actually in Madison Heights, Michigan.
Yeah, I know. That's where I was from.
Yes.
Where I lived in Madison Heights.
Yes. Thank you for that question, Robin. Thank you. Excellent question.
Yes, awesome.
Okay, so it's hitting on 6:30, 6:28. We want to thank you, first of all, for joining us. We ask that you come back again. And in fact, not only that, but consider joining our book club.
It's linked down below. It's in the description of this video live, whether you're watching it on Facebook or YouTube.
It is?
They can just click on it if they're looking. It's like it is. Yeah, it is. Okay. All they have to do is just click on it. And, if you guys would like for us to talk about anything else, definitely leave a comment after this video is, done and it's out there. Anything that you guys enjoyed about this, thumbs up, share it. It helps us out. And I know it'll help a lot of other people who are wondering how to get started in investing, especially in something like this, dividend growth stocks.
And we have our next topic for next week. Can you put Nancy's?
I see. Yes.
Perfect. And this is the beauty of this whole concept, is that we take your questions that that you ask us. I mean, and we can actually put a little outline together for you and discuss it. But this is perfect. Dow Jones, NASDAQ, S&P 500. We will talk about that next week, Nancy.
Like that.
So
Thank
be
you
sure
for
and
that.
come back and join us. And it's
Cool.
6:30. We're going to end on that note.
Awesome,
Okay.
everyone. Enjoy your Wednesday evening. And for those of you who are in the group, I'll see you there. Bye,
Yes.
everyone.
And Grace, yes, I'll talk about the dogs of the Dow.
Dow.
All right.
Bye.
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 Have a good week.
Bye.